Welcome to the Trading Market Technicals morning call video for Wednesday, March the 13th. Dow did manage to close slightly positive, marking an 8-day winning streak. Dow up 277, Nasdaq down 11, S&P down 3. Gold had a nice little pop higher, up 10, and the dollar slightly lower. We did talk about the dollar. We're going to go into the dollar and gold in this segment, as well as Max Payne and the open interest on the spiders. We'll see what that is, since this week is an options expiration week. And we always said, as far as options expiration week, that the markets usually have a bullish bias to it. If not, even if it closed slightly lower, I don't see a big move this week happening, unless obviously something came out of North Korea or some sort of catalyst, some sort of bad news coming out of Europe, what have you. But nonetheless, the markets are grinding, staying at these levels, really not breaking the 1555. However, just sitting here. We did have an inside day from yesterday, and I'll show that to you in the charts. We have a lot to cover, so let's get right to it. Let's look at the economic data first. Right now, we a lot of retail sales ex auto, import prices ex oil, and we have business inventories today at 10 o'clock. We were very light yesterday. We only had Treasury budget, and so the market's really just kind of meandered around, not doing much of anything. To be honest, this January, February has been very, very quiet as far as volatility. We're at 5-year lows in volatility, and we need to see that volatility pick up. There will be a trade in the volatility sector. So we're going to be looking at volatility in the coming days, maybe weeks. GDX, we're going to be looking for a trade in GDX. And as far as oil is concerned, we are looking for an oil trade as well. So we'll just keep an eye on this until I'll put it out there when I see a nice trade happening. But volatility trade looks like we might be getting into in the next couple of days. I'd like to see another big push lower, nice big spike in the VIX, and then maybe pick up a nice volatility trade via options. Okay, so we have our econ data. Let's get into the charts, and I want to show you. I want to talk about the EEM, and that's the emerging markets. And I mentioned the other day about China and emerging markets. This is definitely a red flag here. This is something that I don't want to see, or you don't want to see if you're a bull. Emerging markets have rallied, and then now they're starting to get really soft. China's getting soft as well, and that whole Pacific Rim up there. So if you look at our ratio chart of EEM, SPX, as you can see, we're rolling lower. We are definitely have weakness to the S&P, and now we're have our overbought reading in our stochastics, and I'd like to see this. If this is going to roll over, this could definitely at least help some part of softer equities, if you will, and also commodity block currencies too. You might want to look for if you are trading currencies such as the Aussie dollar, the New Zealand dollar, and the Canadian dollar. Those three, China starts to lose its momentum again, which I think it will. I think part of the problem is going to be China, and as you can see here, here's the FXI, the ETF for China, and look what's happening here. Just rally back up to this area and fails. Rally, fails, and now we're back down to this area. So break below 37.50 will at least have us run down to the 200-day moving average of 36.25. So we have the FXI SPX ratio chart, and as you can see here, definitely has relative weakness to the S&P. So this is definitely a concern of mine. And then I want you to take a look at Shanghai. Same thing. We did have that oversold rally all the way up into December, January, and a good part of February, and then we started really see volatility start to pick up with the larger candles. So this is definitely a concern, guys, and this is something that you really need to watch. This is definitely a concern. If you're a bull. Now, if you're looking for the market to roll over, which I would love to see a 4 or 5% correction and then buy into the market, but we are getting into March, and the selling may go away. Believe it or not, it does work most of the time. So we want to really be cognizant of where we are here in the markets. I think if we do get a little bit of a sell-off, I think buyers would come in, push the market up one more time, then make a lower high, and then probably sell off again going into May. But we'll see. That's just right now. That's just talk. All right. So let's take a look at the dollar. Right. Dollar put in an inside day, but also put in a black candle, which marked for a possible reversal. Now the dollar had a great little move out of this descending triangle. Right. So this descending triangle failed, and we broke out of this, and now we're back into this resistance zone. And I think that if the dollar does roll down, start rolling over, and breaks the 82, I think you're going to catch the 20 and then possibly that 200 down in this area, somewhere in here. And if that happens, that should put a bid back into the commodity sector as well as equities. So I would think that this dollar would help equities. And right now, since the equity markets in worldwide commodities really just ignoring what's happening in China and really anywhere else, I think that we would at least try to push up one more time. And this is where the dollar would help. So this is where my theory comes into play of my analysis saying, okay, if the dollar is in this area, so when we pull in, maybe make some sort of a bull flag here, and then really push high and break out, that's when we would have that sell-off. But I think we're a little bit away from that market sell-off right now. We might have a 2 or 3 day blip, but I really think that we're a little bit away. And the traders and investors that follow me, we do have a variety, as you know, the position traders, long-term investors, and swing and day trades. So if you're a long-term investor, I would just sit tight through this. But again, I'm a big fan of buying protection, especially with the VIX and volatility so low. Insurance is very cheap. But anyway, you can ride the storm out if we do get a couple of days, 2 or 3 days. But I think here is going to be telling. So if the dollar starts to roll back down again, and right now it is inversely correlated to what the equity markets are doing, we're going to have one more push higher. But I think the commodity sector is going to have put a nice little bid into it as well. So this is something that I'm watching related to our commodity stocks and different asset classes. Take a look at copper since we're on that. Now, copper had a nice day yesterday as well as all the metals. And that is something here that is a good sign if you're a bull. As you know, copper is an industrial metal, manufacturing, right? It gauges good manufacturing. And with China last week, a couple of weeks back, saying they're going to slow down their construction so they can slow down their real estate boom, copper took a big hit. And now this is definitely a concern that we're at the low end of the trend line here of this large symmetrical triangle, and we're just really back testing it. So really still has bearish configuration here with the moving averages. I'd like to see this break above the 200, but it has a lot of work to do right here. But at least copper is at least settled in and is hanging around the 350 area. Okay, now as far as copper is concerned, I just want to look through a couple of indicators, and then we'll run into gold and then the VIX. But if you look at our NYMO, which is the McClellan oscillator, this has really been doing nothing for the last month of February and good part of March. We're just really sitting here. So really, it's not telling us much of anything other than the fact that we can move higher and we can move lower. So we don't have an overbought reading and we don't have an oversold reading. So this is just basically a neutral territory. Even though this indicator tells the markets are not overbought, our other indicators and our momentum indicators like the MACD, Stochastics, RSI are reading overbought, and this would just help. Another big spike up, you would see the McClellan oscillator start to break above 60. And anything above this area here, 60, 70, would give us an overbought reading. And that would be a good sign that the markets are ready for some sort of a pullback. But not until then. All right, now let's take a look at the gold sector. Here's gold itself. Gold had a nice pop yesterday, and it did catch the 20-day moving average. Now, the ratio chart, gold versus the SPI, is still lower, as you can see here. And we are at the lower end of this, upper end of the trend line of the support. And then we do have one down here, which is very, very low. If it did break to 1525, I would see a big flush in gold. But as of right now, it is holding true in this area. So gold is looking okay, trying to stabilize here. I still think for a trade, I think GDX would be a good trade, but we need an entry. And now that gold is up in this area, and I'll show you further on the charts, you might have a good risk-reward entry, but I want to see gold follow through a little bit more, or at least make a lower high on the next pullback and then pop one more time. And then that would get me for a good swing trade, maybe for a day or two, or even in the intermediate time, intraday. All right, now let's take a look at the Huey. And I did mention the Huey yesterday, the Amex Gold Bug Index. We did hit that 61.8% retracement off the 2009 low and 2011 high, and as you can see here, we have a nice big candle. Even though this candle it's during the week, so that we haven't finished the week out yet, but this is a nice little spot, risk reward, to really start maybe looking to buy gold. Now, gold could actually hold here and start to move higher again. We shall see. It is a little early yet, but we'll talk about that in the coming days. Here's the VIX. Now, this volatility trade that I'm looking at, it's going to be probably based with options. So, but watch this. If the VIX can hold here, now don't forget we're at 5-year lows here, 5-year lows. I think the ultimate low was 982. Don't quote me on it, but it's around that area. which will still give us a little bit of ways to go to really hit that low. But if we could flush one more time lower and then reverse, that's going to get me into that volatility trade. And I'll put it out there, let you know what I'm looking at as far as the options concerned. All right, now let's take since we're talking about option, it is options expiration week. I want to run through, and I always do this every week, about Max Pain. Now, here's the open interest of call and puts, right? So what's the theory? The theory is that the market conspires to cause max pain. It causes the most number of people to lose most amount of money. So if the market is to accomplish, what does the market need to do this week? So we have puts outnumber the calls 1.9 to 1, really about the same from last month. So the call open interest is the highest between 150 and 157, and then there's a spike at 160 and a huge spike at 170. And then another big one at 175, right? I'm going to ignore the 175 spike. The put open interest is highest at 125, 130, 135, and then between 140, 152, 154, 170, and then of course the 175 spike again. I think this is the same trader that put this on way up high here. Okay, but anyway, if you look at the two, other than getting rid of the 170 spike here, if you kind of take a look at that and just kind of put that away in perspective, there's definite block of call open interest above 150 and a block of put open interest below 154. So this gives us an overlap between 150, 154-ish. So a close near the top of the range would close the most number of options worthless, right? And doing the most damage. So with today's close of 155.68 in the spiders is slightly above that range. So that means that a couple of call buyers will make some money this month, right? At the expense of closing more puts worthless, would be acceptable, but a slight move down would cause more pain. So as far as the open interest of 175, the calls will obviously expire worthless. And I'm not, again, it wouldn't even look at the 175. The calls would expire worthless. And since the SPY is near its high, so anyone who bought puts is down money right now, right? So if they're down money right now, we need a couple of good selling days to achieve max pain. So I'm looking at a slight move lower, 2 days, 3 days, grinding lower, low volume like it's been doing to achieve max pain. Now, unless the call buyers make some money, you got to have a real the call, other than the call buyers making some money, you'd have to have a real market collapse for the put buyers to be to make a ton of money. Something like, again, like that North Korea issue that I was telling you about, bomb South Korea, and the whole market collapses for the puts buyers to make money. I don't think that's going to happen this week. So if that's the case, then we're looking for a slightly lower, couple of days sell off, and then that would really instill max pain. All right, so now let's go into the charts real quick here. And again, nothing really has changed. We had an inside day from the previous. I just want to show you this spiders 15 minutes. Look at this. Literally just grinding higher on no volume. When I mean if sitting in front of the screens all day is the most boringest thing that I've ever seen in the last several months, I'm telling you, you could ask anybody who's trading during the day, this is really boring. No volatility, no fear in the markets, which is another red flag for me anyway, being a contrarian. All right, real quick in the GDX, I just wanted to show you, here is just my theory. Maybe we make an inverted head and shoulders. We run back up into here. We push back lower, create that right shoulder, and then really push higher. And we are at resistance right now at the 20, so it would not surprise me the GDX pull back a couple of days, okay, 2 or 3 days, which would be fine. We just wouldn't want to see it really getting down to the lows again. I'd like to see it pull back to 36.50, 36.60, and then really start to run. All right, and then here's the USO. And as you can see here, we had a nice one for 3, 4, 5 days, and now we're getting into this area of resistance, the 200-day and the 20-day above it, and of course the 50 way above that. So maybe another lower high from here, 32.80, and then really start to push. I think that oil is going to really have some sort of a rally here. It does look like it that anyway. But again, we'll take it one step at a time. Here's the spiders walking up the line here in this upper end of the Bollinger Band. We're overbought here in the stochastics, overbought in the MACDs, overbought in RSI, and look at the volume, just tapered totally off. No volume at all the last 6, 7 trading days. Actually, the last since the beginning of January and into February, we just grinded higher every single day with no volume. So this is really a concern and continues to be a concern. But an overbought reading is not a sell signal. All right, and here's a 60-minute spiders, and here I just labeled some support areas: 153.65 gap area support, 152.88. Then of course the 150.150. You can even catch that 200 at 152.15. So you might want to write some of these support levels down, guys. But these are definitely support areas I'm looking at, and we have a lot of support too, by the way. Spider, 30-minute Bollinger Band, tight, really, real tight price action. Energy is building, so we are going to look for a move out of this band. It does not tell you what direction, but it does seem like if the markets are looking to follow the trend is up. I think we're going to get one more blast out of here, and then that could be some sort of a tradable top, but not until then. So we have a tight price action here, guys, for the last 6-7 days. Energy is building, so be aware of that. Okay, and here's a spider, the S&P cash, CCI starting to roll back down again. Resistance is the 1555 area, as you can see here, and we are just holding this line. So this is going to be interesting to see where we go from here in the next few days. And again, it usually is quiet. It was never this quiet in options expiration, but usually we get a little bit of a move, and then really next week gives you a good sign of where we're headed. All right, now here's the I put right up in here, I did a Fibonacci retracement from the low here of 1398, from the high up in this area of 1557, and I'm looking at my retracements, looking at a 1561.8, anywhere between a 38 to 61.8% retracement in this line here. 1495, 1478, 1460. So right in this area, this is my first retracement, my first targets in the first move lower, if that even happens, but I'm sure it will. Markets just can't stay up in these areas forever. IYT, ETF transportation sector, and as you can see here, just kind of inside day the last 4 or 5 days. Now, what that does is kind of starting to unwind our overbought reading, right? We're still overbought because we haven't really gone anywhere. We have a bunch of dojis up in this area marking indecision. So we'll break above here, higher or lower, would really help the bear case here if the transports can move lower. Same thing with the Dow. I mean, the Dow is just incredible how the market, people just fluttering into the Dow. Here's a Russell, gauge of risk, good gauge of risk here. Inside day for the last 3 days. So you can see, guys, this is really quiet. This is a real quiet trading. And this is why I say you need to stay nimble. Be nimble. Keep your palate dry. The volatility will pick up, and when that picks up and you're fresh, you're not beaten up by trying to short the market, it's going to happen. You can make your month up in 3-4 trading days. So just take a step back. It's going to happen. Believe me when I tell you that. The markets cannot stay at these levels forever. Even if the market popped higher, it's going to give you an opportunity to at least short upper end resistance. Here's the diamonds. Just absolutely incredible. Sitting really on the outside of this Bollinger Band. But again, you know, it is what it is, and we can't fight the trend. The intermediate and short-term trend is up, and the long-term trend is up. So we're looking for a pullback to look to see if we can buy into the market for a couple of swing trades. And if that doesn't happen, we just take the best quality trades during the course of the trading day. XLF, the banks are going to be interesting when the budget cuts start getting announced. I'm going to really be interested in looking to short some of these banks. Again, this is not a short candidate now. This needs a lot of work. We need to really start breaking down and break below some of these areas here. So just want to let you know. But down the road, maybe in a couple of months, 4 to 6 weeks, we might get something here. All right, now here's Apple. I have Apple. A couple of guys asked me about Apple. What do you think about Apple? We had that move the other day on, I think it was on Monday. Tuesday we got followed through, and then we failed, and we're sitting on the 520. As you can see, this is a major pivot right here, 520 in Apple. And look at our momentum indicators, flat line here. Okay, we need to really break above 20 in the stochastics. RSI really needs to start turning up, and our MACD literally just pointing lower here. So really needs a lot of work. I think again 420 would get us to the 200-day moving average. 345, 355 would be the next target. Of course, you're going to have a little support at the 400 round lot number. But guys, Apple does not look good. And I keep saying that, and I stress it. This is not the time to build a position in Apple. For a trade, yes. For a day trade, maybe an overnight trade, sure. Make sure you have your stops in place, but this does not look good, guys. This cannot rally, cannot get above the 440, 450 area. So this is a big concern for me. If you're trading Apple, okay, I don't trade Apple, but I definitely use it as a gauge, a market gauge. Very important to see what Apple's doing. And then the Qs. Lastly is the Qs, guys. A little long on the video. I didn't have the video yesterday. I had problems uploading the file. Didn't have enough time in the morning to redo it. So we got a good bite of what's going on with the open interest today for this week for the options expiration. So be careful, be nimble out there, guys. Opportunity is around us. It will happen. Trust me. Have a great day. Be safe out there. We'll talk to you tomorrow.